مساء الخير جميعا. اتمنى تكونوا بخير. هنبدا البانل بتاعتنا النهارده. اول بانل بما ان معانا جراج من اورنج كورنرز فهنعمل بانل بالانجليزي فاتمنى تسامحونا. Good evening everybody and welcome to our opening panel. If you can take your seats please so we can start the conversation. So today's topic is very interesting in the middle of all what's happening in the investment space. How to safeguard your investments, especially in this turbulent environment. We are more interested in the startup side, but just to give an overview, a quick overview and perspective, whenever someone is investing, they usually split their investments in separate, what we call asset classes, different types of assets. Stocks in the stock market is a typical one. Bonds أو شهادات الاستثمار is another typical one. Real estate is also another side. Gold and commodities are another side. And then we have startups at the end. And whenever an investor globally, whether an entity, an organization, or a person is investing, they usually try to spread their investments across the different asset classes. So they put some parts in stocks, some parts in bonds, some parts in real estate, and so on. And usually the comparison between the different parts go in terms of the risk versus the return. And there's also a third dimension, which is liquidity. So the risk is what's the chance that you would lose money on your investment. The return is what's the expected return on investment in case things go well. And the liquidity is how fast can you liquidate, تسيل the investment in case you want your money. So startups are a very interesting and tricky space because they're very long term, they're highly illiquid, and they're also high risk. But the hope and expectation is that if things go well, it's a very high return. So this is the context that we're in. So today we have a fantastic panel. All of them come from investing in startups background, and Greg, you kind of somewhere a mix in the middle. So let's start with first a round of introduction. If you can tell us a little bit in 1 minute about your organization, so that everybody who's not initiated would know about you. So I'll just go in this order, Dina and then Greg and then Tamer. So Dina.
Thanks Ayman, lovely being here. Lovely seeing you all. So to reiterate, I'm Dina, I'm the Chief Investment Officer at Flat Six Labs. Flat Six Labs has been around for the last 12 years. We're the lead seed investor in the Middle East, started out of here, hometown Egypt, and then very quickly expanded across the North Africa and the Middle East. And the idea is we are the first check to support companies in their journey, and technology and innovation companies in their journey towards success. We provide the cash, but we also provide the mentorship and the support, and we keep supporting them as partners all along their journey. We've so far invested in 360 companies across the region, and very happy with some of the success stories we've been able to support.
Fantastic, thank you, Dina. Greg?
Hi all, my name is Greg. At Our Ventures. I'm based here in Peru. I have arrived. Hi, Greg from partner at Orange Ventures. Orange Ventures is the VC arm of Orange, the telco, and we are really a VC. We are not a corporate VC. We are not a strategic investor. We are behaving like a VC. We invest from seed stage to Series A across Africa and Middle East. And so far we invested into 20 startups and 5 in Egypt, and that's why I relocated here.
Fantastic, thank you, Greg. Tamer?
Great to be back here, and very nice to see everyone. My name is Tamer Azer. I'm a partner at Shorooq Partners. We're a seed to Series A investor, investing from Morocco all the way to Pakistan. We've been proud to back about 60 companies across the region, managing about $250 million of assets under management across gaming, venture capital, and venture debt. It's very exciting to be here, and thank you for being with us.
Fantastic. So let me get the first quick round of basically what's your perspective on what's happening locally and globally. So globally, this is a very challenging time. Lots of challenges happening on the investment side across the board, whether in Europe, in the US, in Egypt. Same thing locally in Egypt. We all know about what's happening in the economic situation. Where is the startup or your perspective on how is this big macro is affecting the startup, and how are you dealing with that from your investment side? So I'll go in the same order. We'll start with you, Dina, and then we'll go to Greg and Tamer.
So, I mean, I'll try to be positive, which is slightly more tricky nowadays. But I mean, I think we all know the economic situation, the ripple effects spread across the world. It's really not just in Egypt. But I think it's very clear that most startups do in many cases struggle, if at the very least in maintaining the real value of their economics, because overnight, even though many companies are growing operationally, they could be perceived as shrinking from a financial perspective, because if you're thinking of it from a dollar term. Now the other something that we all have to be, we're probably all very familiar with, venture capital at large is a very dollar denominated industry. So even though companies are doing well locally, from an international perspective, they can be sort of under a slightly more negative view. Nonetheless, I think my view on the matter is that the Egypt and the emerging market story remains to be very strong. I think the space for innovation remains to be very strong. I think the need for innovation remains to be a lot stronger than many other ecosystems around the world, and even the more developed ecosystems. I think there's a lot of what we're seeing is a spillover negativity towards the region, rather than a true fundamental reason to say that things have changed. I think the fundamentals of the region remains to be the same. We still have the huge market, we still have the youth, we still have the educated and the technical talent, and we still have the demand, and it's probably, if anything, ever growing. So I think there's a lot of positive in how I feel that this could be a bump that we can come through or walk through because of the fundamentals. I think the one thing that I would say needs to be taken care of is for startups to be a lot more agile than before. I think they need to be aware of the situation. They need to very quickly adapt, and they need to be humble in their expectations, because we did come off from a high. Now, for better or worse, it's a high, and I think there's actually positivity in a correction just to bring things back to the ground.
So as investors, you still see the opportunity on the ground, you're still investing, you're still continuing on the path.
100%.
Fantastic. Greg, so you're basically thinking from a global angle, you're seeing Egypt as part of actually a big global and regional perspective. So first question, why does Orange invest? So if you can tell, why are you guys interested in investing in startups?
Yeah, that's a good question. Orange is a telco, and as a telco is often seen as a gatekeeper. And there is a temptation when you are a big corporate is to believe that you can do everything by yourself. And we know that when you think like that, you are killing businesses and you are not creating value for anybody, because at the end you handle very badly. So we thought that we need to find a way to connect with the ecosystem, and there are many ways to do that, but we think we try to find a way to be in a way where we are legitimate. And the easiest way is to support startups, financing them, because as a corporate we have cash. And then we have some internal leverage, such as access to the market, but to handle a big corporate is tricky. So first we provide cash, and then we try to open the doors to provide value to the startups. But ourselves, we are humble. We know that we don't want to overpromise. Open and give access to customer, to startup being a corporate. It's very often a promise which nobody is able to provide in an easy way. So starting to create relationship, being an investor, and then day after days, with a lot of effort, we open our doors. We give access to the right people in the organization, and then we manage to build success stories. But it takes time.
And what's your perspective on the investment environment now? Are you still investing? What are you looking for in startups?
So we are strong believer on the continent, in emerging countries, and first on the continent, Africa and Middle East, and from a VC perspective, it's the last continent where we see growth. So it shows that, and we know that there will be a catch-up effect. Africa in a whole, if we include North Africa and Africa, it's less than 1% of capital raised in the tech industry. And there are many people, looking at Africa and India. India is a proxy of what Africa could be in terms of fundraising and VC traction. And we see that we should experience a catch-up effect. It's not because we have some issues today that the fundamentals disappeared. That's not true. And because there are opportunities, we see entrepreneurs side them, and they are the most legitimate and the more capable of sizing those opportunities.
Fantastic, thank you, Greg. Tamer, what's the view from your side?
So, like Dina very well articulated it, the fundamentals are still there, right? And the most important one for me is that the problems that many of these companies are solving are still problems. The problem continues to exist and we can continue to solve it. We just need to build conviction that folks who are solving the problem are the ones who can in fact solve the problem, right? So none of our big fundamental issues have been solved, right? And there continues to be companies that are trying to solve them. In fact, many of the best funds around the world have had their best performance in vintages in which there was a really bad and turbulent time. So it's actually, if you're a little bit more forward looking, there's actually a really good time to invest. You have really good terms. Companies are in need of this capital. Those companies that do actually raise capital and are well capitalized can actually do a land grab and perform really, really well, while others who are struggling to fundraise have not been able to do so. So if you find a company that is capable of solving a fundamental problem that is yet to be solved and you capitalize it really, really well, you can do some wonderful and amazing things, right?
Yeah, and Tamer, from your side, are you currently looking at investments, and what are you looking at? What kinds of companies are you looking at?
Without question. So in the last 12 months, we've deployed across 14 companies close to $18 million. Not in Egypt, across the region, right? In Egypt, we deployed in 3 companies in the last 12 months, and we expect in the next 6 to 8 weeks to deploy in another 3.
That's fantastic. And can you tell us in what sectors, what problems are they solving? If you can take us a little bit through.
Yeah, we continue to believe that infrastructure is still much needed, and we continue to invest in infrastructure-based companies, be them building infrastructure for the fintech industry, infrastructure for SME industry, infrastructure that allows other companies to operate. So we've invested in e-commerce infrastructure, fintech infrastructure, SME lending infrastructure. So these are all software-based companies that are truly solving a need in a massive market.
Fantastic. Dina, let me shift to what's happening on the ground today. So you already have a portfolio of companies and you're getting into other ones. So I'll ask you the 2 questions. One of them, how are your companies doing today and how are you helping them?
Tricky questions again, Ayman. So no, I think it's a mixed bag of results. Now, in some ways, just 2.5 years ago, when sort of COVID hit us all, we had companies that came to a screeching halt. Now, I think at some level, the current economic crisis or economic situation or downturn, quite a few of the startups are somewhat mentally ready to having to adapt. They've just seen that recently. Now it's not as bad. Like, I mean, 2 years ago when COVID hit, we had quite a decent percentage of startups that suddenly became obsolete, right? Because they were tech-enabled rather than tech companies. Now, I think what I personally have been trying so much to support companies in the last few months, even before the economic downturn, I think I've always been a strong believer in unit economics rather than riding a bubble or riding a wave which was a high of just looking at top line growth. And so I think the number one thing that I've always tried to focus on with portfolio companies is unit economics. How are you seeing your road to profitability? How are you seeing, understanding the numbers of what brings in the revenues? How does it translate all the way down to the bottom line numbers? And so I think what we're trying to do is a lot more of that. And in some way, and that's slightly the evil part of me, there's a side of me that can now look at startups and say, I told you so, right? Just, I wasn't being the negative person, I was the one that understands that ultimately, as someone who's been around in the investment world for a while, I'm not negative, I just understand things turn. And so I think that's the number one thing. I think the second thing is, like I said, I genuinely believe that all startups that were solving a problem are still thriving. Now, is there a slight correction in the numbers? Yes. And there's no denying it, but I think all the companies that I had seen that were previously doing well are still doing well, and they're still surviving. Now, like Tamer was saying, there is a bit of a crunch in terms of funding availability, but we were also having that conversation earlier. It's not that there isn't funding in the market. I think the funding is there, and maybe it's time for me to shout out to the VCs. I think what the VCs are doing in many cases is a case of hold and see where it. And I think that's the biggest issue that we're dealing with now, is a slight situation of ambiguity whereby people aren't sure how to react. Now, I think the biggest piece of advice in addition to unit economics is every startup has to be really very frugal in the next period to be able to get over that period. But it's only a matter of time when all the market dynamics reach back in equilibrium. I think that equilibrium is distorted now, but it will come back. But we have amazing companies that are still thriving, the likes of Illa, that's a logistics company. Even many would say logistics is slightly hindered, but they're still finding growth in other sectors, and they've managed to pivot. Shafet, that is able to again pivot to think of, okay, maybe if B2C is slightly affected, how can we switch to B2B and become a lot more revenue generating and think of unit economics. And so I think on the whole, the good companies are still doing well.
Okay. And you mentioned that at some point in time the market will stabilize. What's your perspective on when do you think the market will stabilize, whether in Egypt or globally? I know it's a wild guess, but I'll ask all of you the same question, but would love to start with you.
So I think that's a very difficult question, and that question is very multifaceted, because for the first time, it's not just dependent on local dynamics, it's also very much dependent on global dynamics that do have a trickle effect. I personally think that by end of summer, there'll be a lot more of a stabilization in terms of the new market equilibriums. And I hope that if most startups manage to sort of hold out that long, I think because I feel like even VCs that are holding out or are scared of investing, at some point their LPs would go and say, right, you need to deploy. And so I think there's only so much that people can hold out before activity has to happen again.
I'm glad to hear that. Before I get to Greg and I ask you the same question, I want to compare notes with Tamer, because Tamer, you're also in the VC space. How is your portfolio doing, and what are you doing to help?
So I've been spending a lot of time with my portfolio on some really sort of careful cash flow management. So we've been building almost weekly cash flow statements, forecasts, managing cash week to week, accounts payable, accounts receivable. You spend very, very carefully, right? And you manage your payables and your receivables very, very carefully, because every week matters. Every week of additional runway matters. When you're in a fundraising process that used to take 45 days, now you're in a fundraising process that takes 3, 4, 6 months, right? So even if you're well capitalized and you have a 9 to 12 month runway, that might not even be enough, right? You need to start looking at managing your cash flow extremely carefully, very, very mathematically, and very, very intentionally, right? So this is one of the ways I've been spending most of my time actually with portfolio companies, and it has been very helpful for them to actually look at this and see. Some of them found out that they're not in as much trouble as they thought, and some of them found out that they're in way more trouble than they thought.
Fantastic. Greg, how is your portfolio doing, and what are you doing to help them, especially that you have the angle of helping them on business development side as a large corporate partner?
I'm really a VC, you know, I just have the chance to have only one LP, but then we behave like any VC. And so now we are quite lucky because we started to deploy, I would say mainly last year. So most of our startups are have still cash, and we are lucky. And I think this is to be a VC starting to invest last year and having dry powder, and at that moment it's really an opportunity. But some of the startups are struggling. The one who choose to go too fast last year because the period was very. Everybody was pushing for a hyper growth model and thought that they would raise in less than 3 months. For them, they are struggling. But I'm very impressed by all of them because they managed to pivot their model, and all of them now are operating on a positive contribution margin. I think last year when we were looking at our portfolio, many of them were okay to operate with negative contribution margin to get some market shares. Now it's over, and they managed to build growth, and the path of growth is still high. So I'm very impressed. I would say that every entrepreneur must, as you said, Dina, be very careful with unique economics. It's the only thing which matters. Your capacity to, at every time, to be able to move to a break-even path, and your cash situation should be looked at. How much do you need to go through a growth strategy to a break-even situation, and that's your buffer. And so you need to raise before you go to that buffer.
Fantastic. Let me take a different angle and look at what's happening from a regional perspective. And Tamer, would love to start with you, since you actually, Shorooq is an Emirati investor and they invest across the region, but all of you also invest across the region. You're not only in Egypt. So a lot has been happening in the region. You have different contrasts between countries and the GCC that have now substantial flood of money because of global dynamics, oil prices, and so on. And at the same time, we're having challenges in Egypt. So the contrast between both has been actually a big debate in startups, with many startups looking at different options in the region. Two questions. How are you seeing the prospects from a regional perspective, looking at it as one region from Pakistan to GCC to Egypt and maybe other Pan-African countries? And second, what advice would you give to Egyptian startups in interesting times like these? I would love to ask the same question, but also for Greg and Dina, but I'll start with you.
So the formula, the regional formula has always been you get high volumes from Egypt and Pakistan, and then you get high ARPU, or average revenue per user, from UAE and KSA. The formula continues to be the same. However, ARPU has increased in the GCC while volumes have decreased in Egypt and Pakistan, right? So we're seeing fewer startups in Egypt and Pakistan, but we're seeing more startups in the GCC and KSA specifically, and the UAE at higher terms because capital is going there a lot more than previously. So a big formula for success was that you build companies in Egypt and Pakistan, and then you build corridors into the GCC, and that's how you create healthy balance sheets, right? All that's changed is that the formula proportionality has changed a little bit, right? But what has become a massive risk for Egyptian and Pakistani companies is that they keep growing, in fact doubling in local currency, but they are at best flat in USD. And when you start trying to fundraise for these companies across international markets, all they see is a flat company. And these guys are absolutely killing it in the local market. They're doing a phenomenal job. So the best piece of advice I can give startups in Egypt and Pakistan is try to get at least 30% of your revenue in USD from other healthier markets. It's the only way for you to be able to balance your balance sheet a little bit better so you can actually fundraise in this horrific climate. right? So the opportunity is still there. The corridors are still there. You just have to slightly readjust your formula for how you are expanding, when you are expanding. Continue to be frugal on Egypt and Pakistan, having your kitchens here, having the bulk of your teams here, but go get revenues from other markets that have higher economics.
And do you think that the playbook that works in Egypt and Pakistan would work in the same way in Saudi and Emirates?
So the playbook remains the same. Build your teams here, right? Get the bulk of your talent from here, whether it's Egypt or Pakistan, right? And use that talent to attract revenue from countries like the UAE and Saudi. That has not changed.
Okay. Dina, and then I'll get to Greg for the telecom perspective. Dina, what are your thoughts on this?
So I think Tamer does present a very valid case and almost a solution to the situation for Egyptian startups. I think I beg to differ just a little bit because I do agree, or not agree, but you posed the question which I think is a very important question. Is a product stemming out of Egypt necessarily best suited for Saudi? And I feel like a lot of startups feel like they just need to get to Saudi or the UAE or any of the GC countries like Tamer mentioned have higher purchasing powers. But the thing is, I feel like this stunts growth that targets innovation for emerging markets, which is a very different market than Saudi and the GCC. Maybe my advice is slightly different. I think Egypt, and I think that's part of a bigger political situation. I think we've always looked east as economies and as funding, but there's a lot of money for VC and for startups that targets emerging markets. And I think startups just need to be a lot more nimble in terms of who they speak to, and I think they find it easy to speak to the GCC investors because it's a language we know well. But I think we should look a lot more into sub-Saharan Africa. There's a lot of growth there. I think if we start thinking that we just need to appease the Saudi markets for dollars, it could lead to products that are very repetitive because we're targeting the same market. And the other something that we have to understand is that eventually, if every startup is trying to get into Saudi or the UAE, the competition will become humongous. These economics will not be as good anymore. And even in terms of creating sort of niche products will become less and less. And so it's a double-edged weapon. And I do understand that it's a very tricky situation because a lot of startups are facing the heat from investors. And I think what I personally want to say is put a lot more responsibility on investors to think long-term, because VC is a long-term investment. You mentioned it. We're not about quick gains. We're not about like sort of transactional things. We just have to think long-term. And I think that's what VCs have a responsibility to do, a little bit of that. On the flip side, I think the startups have a huge responsibility to come down with their own sort of, to be a lot more humble. I think there is a resistance from startups to reconsider what valuations are. I've always said to a startup, don't worry about an equity and what your equity shareholding is now, because you could be 20% of a billion-dollar company or 100% of a zero company. You don't win. And so I think startups have a responsibility to readjust their expectations, but also VCs have a responsibility to think long term.
Very well said. And I'll tell you a factoid actually that really corresponds to this. 2017, when we had a major devaluation, very close to this, Egypt's GDP as a country went down from $400 billion to $250 billion immediately after the devaluation, because it's all in EGP. It took about 2 years to go back to the $400 billion through basically inflation and adjustment of prices. So I think to your point, I think for the companies that are seeing, and to Tamer's point, that are seeing the revenues top line go down in US dollars, even though it's going up in EGP, I think basically inflation will bring that to the same number within 2 years, putting aside the growth. So I think actually for investors who are smart, who are looking at those high growth numbers that are doing really good in volumes, they're underestimating the value of the growth that's going to happen in the next 2 years, partially driven by real growth and partially driven actually by inflation adjusting the dollar value. Greg, any thoughts from a regional perspective, especially if you look at the MENA part and you also look at the African part? So what are your thoughts there?
Before coming to Cairo, I was based in Dakar, Senegal, and so I was much more active in sub-Saharan Africa, and I was helping a lot startups to go to an African country, to another African country. And when I arrived here, I discovered that this ecosystem is not looking at all toward Africa. And for me, it's a big surprise because it's the problem that entrepreneurs are solving here are problems which are linked to emerging countries. How do you build solution in an ecosystem where infrastructure still has to be improved, and for cities which have a lot of people and facing a very strong demography growth, and that's the problem you are solving. And those problems are similar in many African countries. And to see startup solving problems here in Egypt to go to GCC, for me, it's not natural. I understand the value of the quality of ARPU and the money available there, but I think the opportunity and the growth is on the continent. And Egypt has this very special situation being between the two worlds, the two continents, and being able to raise fund from Middle East and GCC, from the US, from many places, because everybody wants to come to Egypt to invest in Egypt, so that's a good news for you. But then if you are looking to scale your capacity, look at Africa, and I see more and more entrepreneurs from Egypt going to Nigeria. And there is this corridor between Egypt and Nigeria. I think it's a strong trend that is starting now, but for me it has a lot of sense.
I was actually going to ask you about which countries would you advise Egyptian startups to look at in Africa if you're looking west and south? Nigeria, where else?
I think Africa, it's 4 countries. If we summarize, and it's not true, but let's summarize the continent like that. So it's Nigeria, Kenya, South Africa, and Egypt. And I think the most similar country to Egypt is Nigeria. Kenya, it's an ecosystem built on top of M-Pesa, mobile money, so very specific. And I don't see so many startups out of Kenya scaling into multiple countries except Uganda and Tanzania. So it's very specific. And South Africa, they are scaling in Europe, Indonesia, and so on, and they are not coming so much to Africa. But I would say I would see a lot of similarities between with Nigeria and South Africa. I see some entrepreneurs looking at both into those two countries. The banking system is one of the reasons why there are a lot of similarities.
And are you, as Orange Ventures, helping some of the startups from Egypt get into those markets? Can you give us examples?
Yeah. So as a VC leveraging a corporate, this is we thought that this is where we are the most legitimate, is how we can improve startups to expand, because this is the most difficult challenge when you are scaling. The first one is to take a leadership on your local market, but the next big challenge, and where there is a Death Valley, is really when you manage to scale into a second or a third market. And for that you need network. You need, and that's why, for instance, last December we invited some startup from in many countries, from 6 countries on the continent, to pitch some key people within Orange and to meet some key executives in other group. But it seems something we'll continue to do. Yes.
Fantastic. Okay, let me take the conversation to another angle. I'll start with you, Tamer. There's a lot that's happening now in the markets, at least in thinking in terms of consolidation. Whether people are saying, well, why don't companies in Egypt that are in the same field that might be competing on smaller, merge, consolidate through whether acquisitions or mergers. And the other thing is maybe regional plays where you have countries in 2-3 countries and they can also go the acquisition side. Are you seeing some discussions around that side, whether locally or regionally, and what are your thoughts about it? And Dina will ask you about the same thing.
We're absolutely seeing a lot of these conversations, but the reality is that M&A is very, very difficult, right? So there's a very high chance that a merger or an acquisition does not work out, and that has to be a risk that you think about when you take that kind of step, right? It also takes a lot longer than you think in order to close a transaction of that nature. And the reality is that one player is probably better off being stronger than the other. In order to manage this a bit more smoothly, one of the players has to be strong, right? Then there are two ways to approach it. There's give me money and I will consolidate. And then there's I've already consolidated, give me money, right? Give me money and I will consolidate is far riskier for the investor and less risky for the startups. I've consolidated, give me money, an investor will say, oh, let's wait 6 months and see how this merger goes. So it's, yes, it makes a lot of sense, but reality on the ground is very, very different when it comes to M&A, right? So if one of the companies has a healthy balance sheet, my recommendation would be to always put in a little bit of capital into your competitor, take, at healthy terms, take a 10 to 20% stake. It shows your commitment to M&A. It shows that you are willing to execute your M&A. It has a healthy, clean transaction. Raise additional capital under the thesis of consolidation. If it works, you can actually negotiate terms where you acquire the remaining 90 or 80% at a multiple lower than the multiple of a consolidated raise. So it needs some very creative financial engineering in order to manage risk for both investors and startups, because in reality, M&A is very, very difficult to make work.
And are you advising any of your startups on those types of consolidations?
If it makes sense, yes, right? So we have done a lot of that actually, but we had done it previously on an expansion basis. So we've built a very healthy corridor of companies acquiring competitors in other countries as a measure of expansion. We have funded those.
Okay. Dina, thoughts about this?
Yeah, so I think I'd have to agree with Tamer a lot, is that I feel like the need for consolidations is there. I think the case is very clear. In reality, it doesn't happen as smoothly. And like Tamer said, I think partly ego between two founders that don't realize, but then there's also the hidden, I don't want to say hidden, but then there's a different set of pools of investors on both ends, and there are different interests, and so it becomes very difficult to align such interests. Having said that, I think what I feel is a lot of the time quite, no, I don't want to say successful, but a lot of the time the most common form I see for these consolidations is that there's a stronger company, but then there's a stronger team, and what it comes in the form of is more of an acqui-hire and a share swap. I think that becomes a lot more realistic, especially I mean, because it's a catch-22, you have companies that are struggling and so they want to consolidate, but then you also have companies that are a lot more conscious of their cash flow and their runway, and so they don't want to go out and straight up pay for an acquisition because they really want to conserve the cash they hold on to for a longer runway. And so technically I think it makes sense. It doesn't always translate into it happening so smoothly.
And I completely agree that it makes a lot of sense, and I'm not seeing it happen, so this is why I would have loved to get your thoughts. Greg, are you seeing any consolidations from your companies, whether in Egypt or in other countries, given the environment we're in?
Yes, I see a lot. I see a lot. I have quite some examples in my portfolio, which is not big because it's 20 startups, and I have at least 3 consolidation last year, 3 acquisition. Because there are opportunities and it's a great trick to accelerate expansion. But I'm trying to lower a bit the appetite of my founders, because it's not because the valuation are great and talents are very eager to join a successful team that you need to go too fast on that. Because it takes time to digest a new company and build a team. When you're early stage, everything at the end is a team, and you need to be very careful into your corporate culture, and invest a lot of time building your corporate culture. And when you are acquiring new business, you are destroying a bit that identity that you built during some years or some months. So be very careful, because that's something which at the end could destroy the company. If there is any problem with the team, at the end this is the death of the company.
And let me ask you in terms of, and this is probably our closing round, what advice would you give to startups that are fundraising now? We have many startups, many entrepreneurs, they're looking for investments, different stages, and the three of you actually are investing across the spectrum in terms of stages and sectors. So I'll start with you, Greg. If you get an investor, a startup that's coming for you, what would you tell them, and what would you be looking at that would actually accelerate that investment?
In those times, I would focus very much on core problems. It's something we say every time, but still, when we look at the deal flow, there are many talents addressing some nice-to-have problems, and I think you need. Your time deserves to be dedicated to vital issues. So find a use case with people having a big issue to solve and address that issue. But then in terms of fundraising, your pitch will be quite different. You will be able to show that you focus a lot, and you will know, depends on which stage you are, but let's say you start to operate a bit, you have an MVP, which is when you are pitching some funds like me. You know your economics and your unit economics, and you have an advantage in terms of go-to-market. Actually, when I invest in seed-stage company, 60% of them pivoted. So I would look at the team and the capacity to be very careful with their unit economics, and sometimes to be able to, if they are not raised, if they don't manage to raise, to find a way to be break even and have thought to this plan B from the beginning. Nothing changed so much, and do not ask as to. We continue to hear some valuation asks which are disconnected to the new reality. So be careful with your numbers.
Fantastic. Tamer, thoughts, advice to entrepreneurs? What are you looking at or for at this point in time when you're looking at startups?
One of the most sort of well-known conventions in startup investing is a statement that, I would rather invest in an A- team in an A+ market than an A+ team in an A- market, right? So like Gregoire said, find the right problem to solve, find a big problem to solve, and work to make your product actually solve the problem. Right? If you can, so it sounds really basic, but in reality, this is the fundamental reason all of us here exist, right? If we can find a big problem, create the right product to solve that big problem, and just execute, right? You can continue to raise money, you can continue to build momentum. It's going to be a tough few years. But if you manage your money right, you continue to double down on the correct thesis, you will do well.
Fantastic. Dina?
So I think very little to add to my colleagues, but I think the last thing I'd say is there's a lot of competition. So you need to have a very, very clear niche and differentiating aspect to what your product is. And I think this is me saying what Gregoire and Tamer said differently, which is you need to look for a market, and I just would like to remind everyone that's the basis of VC. It's very little capital that can lead to multiples of growth. That's the true fundamentals of what venture capital is about now, and that's exactly what startups need to focus on. What is a clear value proposition that allows me to create a huge multiple in terms of growth with very little capital? And so I think that's the number one thing I would advise all startups, and in terms terms of fundraising, and I've always said it, even when the markets were good, give yourself the time. Don't get hung up on a particular milestone that you want to achieve, getting yourself so close to the edge of being very, very cash strapped until you go fundraising. Go fundraise. Don't worry about the valuations for now. Grow your company, and the rest will fall into place if you're able to do that.
Thank you, Dina. And I think there are several lessons that we learned from those days that we're in. For me, at least, some of the most important lessons is that many startups, at least for the past couple of years, were driven by investors rather than, or by investments rather than by the customers. And I think it's very important that the first driver for the business is the customer, the value you're doing, what you're really doing in the market, and trying to be as independent, revenue generating, profitable, and thinking about investors, and sorry to my friend, more as a necessary evil, sometimes even unnecessary if you can. So how far can you go before and without getting an investment? And if you need it, you can go, but you go with a very strong company, strong business, and then you can actually have a good conversation on both sides. If you're just looking for investment and that's the driver for the business, I don't think that's the right thing. And the second thing that I've seen is it's always, startups has always been a game of who's the fastest to run. And I think now it's a very different game. It's more of who's the last man standing. So whoever is the one that's going to be surviving in 2024 is actually going to be the winner, regardless of growth or any other things. It's the fundamentals of the numbers. Can you keep the business? Can you generate enough cash? Can you continue? And based on that, you're always going to be actually the winner. Very different mindset, very different space. So it's a pleasure to be with you. And thank you so much, Dina. Thank you so much, Greg. Thank you so much, Tamer. And I hope that you have a fantastic rest of the day. Thank you, everyone.
Thanks, Ayman. Thanks, everyone.